Imagine this. You're walking down the street and see a unique investment opportunity, a property at a deep discount or a chance to buy stocks before they skyrocket. But you don't have the cash to take advantage of it. Today, we'll analyze 8 assets that make people rich and never work again. Pay close attention because the more you have, the faster your wealth will grow, and with it, you'll be able to take advantage of opportunities that arise. Let's start with the foundation of wealth: cash. Cash is king, but not in the way most people think. While keeping all your money in a savings account isn't smart due to inflation, having cash reserves is critical. Just look at Apple. They have over $150 billion in cash on hand. And it's no coincidence. Why do the rich hold on to cash when they can invest it? 2 key reasons. First, opportunity. The best investments don't wait. If an opportunity arises and you don't have liquid cash, you miss it. The wealthy always have cash set aside to take advantage of opportunities instantly. Second, higher returns on cash transactions. Those who buy cash get better prices, whether for real estate, businesses, or high-value assets. Additionally, they can lend money at high interest rates through peer-to-peer lending, a huge advantage if done right. Banks offer less than 1% interest, but peer-to-peer lending can generate returns of 7% to 20%. But remember, if something sounds too good to be true, it probably is. Always assess the risk before making any investment. Number 2, real estate. This is a big one. We personally love real estate. Why? Once again, 2 main reasons. First, rental income. Every month, money comes in with minimal effort. And if you're smart, you can leverage technology to boost returns. Instead of traditional long-term rentals, short-term rentals through platforms like Airbnb can generate significantly higher yields. The downside? It's not as passive, requiring more management. And the second is appreciation. Population numbers are rising, and more people need places to live or rent. Demand keeps increasing, and so do property values. Real estate prices have historically trended upward, making it one of the best long-term investments. Now, when it comes to real estate assets, there are several types. Residential buildings. People live in your property and pay you rent. Office buildings. Businesses lease your space to operate. Commercial buildings. Retailers and other businesses rent from you to sell their goods or services. Land can be developed, cultivated, or simply held for future appreciation. But here's something crucial. The house you live in is not an asset. It's a liability because it costs you money rather than making you money. The key is to invest in real estate that generates income, not just drains your bank account. Number 3, digital content. Information is one of the most scalable assets in the world. You can create a digital course, a book, or a song once, and it can sell forever without additional effort. Unlike physical products, which require inventory and logistics, digital products have zero marginal cost, meaning each additional sale costs you nothing. Look at best-selling authors. They write a book once, and it continues generating royalties for decades. The same goes for online courses. Once created, they can be sold to thousands or even millions of people. Music is an even crazier example. You only need one hit song to be set for life. Just look at Gangnam Style. PSY made over $10 million from that one track thanks to YouTube, iTunes, and licensing deals. But it's not just books or music. YouTube, podcasts, and social media have turned regular people into millionaires by monetizing their content. The best part? Anyone can create and sell digital content today. Number 4, stocks. Now stocks aren't as complicated as those intense Wall Street movies make them seem. In reality, stocks are one of the easiest ways to own a piece of a successful business. Think of it this way. If a company issues 10 million shares and you own 1 million of them, you now own 10% of that business. That's how powerful stocks are. They allow the average person to have a stake in some of the world's most successful companies without needing millions of dollars up front. The best part? The entry barrier is extremely low for some companies. There are 2 key ways to make money with stocks. Capital appreciation. If the stock price rises over time, you can sell it for a profit. Dividends. Some companies pay out a portion of their profits to shareholders as dividends, giving you passive income. Investing in stocks can be risky. But the rich know that long-term investing beats short-term speculation. The key is owning strong businesses and holding on to them for years. Number 5, bonds. When governments or corporations need money, they issue bonds, essentially IOUs that investors can buy. In return, the issuer agrees to pay interest over time and return the original amount when the bond matures. Bonds are one of the safest investments because many are backed by the government. But safe usually means low returns. Most bonds pay around 3% per year, which beats a savings account but isn't exactly exciting. Still, bonds serve a purpose. They're great for preserving capital and generating steady income, especially if you're looking for stability. Generally, bonds have an expiry date ranging from 1 month to 30 years. While they provide a predictable stream of income, they won't make you rich overnight. However, they can be a great option for diversifying your portfolio and managing risk. The two main ways to buy bonds. Directly from the Treasury, government bonds can be purchased straight from official sources. Through brokerage firms, you can buy and trade bonds just like stocks. While bonds won't skyrocket your wealth, they play an important role in financial security, something the rich know very well. Let's go with the last 3, but I'll give you a 4th one as a bonus that will add value to your experience. Don't forget to subscribe so you don't miss my content. Let's continue. Number 6, equipment. If something helps you make money or makes you money directly, it's an asset. Simple as that. If you're a farmer, your tractor is an asset. If you're a programmer, your laptop is an asset. If you're an Uber driver, your car is an asset. The key is understanding whether something generates income or just drains your bank account. Too many people justify expensive purchases by calling them investments when they're actually liabilities. For example, if you buy a brand new car but don't use it for income, it's a liability. It depreciates in value, requires maintenance, and costs you money. But if you're a content creator and you invest in a camera that helps you grow your YouTube channel, that's an asset. The lesson? Buy assets that generate income, not liabilities that only look good on Instagram. Number 7, mutual and index funds. If stocks let you buy shares in individual companies, mutual and index funds let you invest in multiple companies at once, spreading your risk and increasing stability. Why does this matter? Simple. Diversification. Instead of betting on one company, you're investing in an entire basket of them. Historically, index funds have been one of the best performing asset classes. Now, let's be real, most people shouldn't be picking individual stocks. The odds of beating the market consistently are low unless you have access to insider-level information. That's where index funds come in. The S&P 500 index holds the 500 best-performing U.S. companies. If a company in the index starts underperforming, it gets replaced by a stronger one. Over the past 90 years, the S&P 500 has delivered an average annual return of 9.8%, a solid long-term investment. Now the fund, Vanguard S&P 500 ETF VOO, is a top choice. If you're serious about long-term wealth, index funds should be in your portfolio. Number 8, trademarks. The power of trademarks isn't just for big corporations. Anyone can leverage them to create wealth. Take celebrity trademarks, for example. Did you know that Taylor Swift trademarks her album names and lyrics? Every time someone tries to print this bead on a t-shirt or mug, they either have to pay her or stop selling it. It's not just musicians, athletes, influencers, and business moguls use trademarks to protect their brands and cash in. Even Donald Trump has trademarked his famous phrases like, "You're fired." But what if you're not famous? Well, here's where trademarks can still work for you. Branding and business value. If you build a brand with a strong identity, your trademark can become one of your most valuable assets. Think Nike's swoosh or McDonald's golden arches. Trademarks that are worth billions. Merchandising and licensing. If you want a catchy phrase, a unique logo, or a cool design, you can license it to companies that want to put on products. Franchising. If you build a successful business and trademark your name and concept, others will pay you to use it, just like McDonald's or Subway. The bottom line? Trademarks protect value, and if done right, they can become money-making machines. And now let's go with the bonus one. Number 9. First mover advantage and proprietary business models. Whenever you innovate in a commercial manner, This innovation is regarded as an asset. The App Store by Apple is one of those innovations. Microtransactions in games are a new business model. The fact that Netflix evolved from delivering physical DVDs to a streaming service was a massive asset. It gave them an edge to capture market share while competitors hesitated. It took years for others to catch on, and now streaming services are everywhere. The same transformation happened to music, from physical albums to digital purchases to subscription models like Spotify and YouTube Premium. Airbnb disrupted the hotel industry with a new way to rent short-term accommodations. So, your job is to figure out how to take advantage of any of the assets mentioned in this video and secure the bag for yourself. I'd like to know which of these assets you plan to protect in the future. Don't forget to subscribe and click the bell so you don't miss any of my videos. And remember, even if you don't have the financial resources to buy these assets, what you do have is your time. And with it, if you work hard, you can achieve the rest. See you in the next video. Take care.